focus on the big story. UltraTech Cement, they are focused on entering the cables and wires segment with a capex of around 1,800 crores. To understand the impact on the company, that's UltraTech, we have Mangesh Bhadang who joins us to help us out with what would his preference be from cement and what they should have ideally done. And the stock that's under pressure, KEI Industries. Mr. Anil Gupta, the chairman and managing director, joins us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, Mr. Gupta, I'll come across to you first. Another big name coming into your space. You have close to around 10% of the market share. Do you think the industry is big enough to accommodate a large name like UltraTech Cement? Do you think that, in fact, you're going to be under pressure from here on? Because that's what the stock market believes.
Nigel, I'm absolutely clear that this and the market space is big enough to give space to another player. Number one. Number two, UltraTech will take minimum 3 years to start their production. Whatever somebody may say on paper, 2 years, but we have our long experience in developing the industries. Number three, it will take minimum another 3 to 4 years to, or 5 years to develop the brand for wires, and also to get the, if they come at all in the cables, it will take many years to get the approvals from different customers, different utilities, different departments, and also, develop their channels. Secondly, this space is having thousands of, customers. It is not like cement that you sell to some distributors and then they further distribute. Here, lot of, businesses we are doing B2B, where we are having direct relationship with the customers, and our SQs are too many. Our number of items we deal with, the number of type of cables we deal with is too many. I mean, no company can do it in unless they are focused on an industry for at least 15 to 20 years. So I have no reason. We are export focused. We have a lot of marketing team in place. So I don't have any fear about it.
Okay, all right. Mr. Gupta, you're putting down some points and you believe for the next few years, at least UltraTech will only be able to make a material impacts in the next 3 to around 4 years, according to you. And you believe the industry is large enough to accommodate another large player as well. My question to you is, going by what happened in the paints division, and their foray out there clearly disrupted the space and margins came under pressure as well. Do you think it'll put a risk to margins of cables and wires companies like you?
Absolutely not. We are already working on very thin margins of anywhere between 10.5% to 11%. And a newcomer, their costs will be much bigger. I don't think that, and they will take time to scale up the production. So I don't think that it will bring any pressure on the margins. Also, they are a listed company. They also have to make money. So they may not be able to disrupt the market by just slashing the prices, because it is in this space it is very difficult to increase the prices once you slash them.
Just one more point, sir. The unorganized market is around 25 to 30%. So do you think all of you all will prosper and you all will take away market share from the unorganized market? Is that the way you see things from 25-30%? The unorganized market, say, goes down to mid-teens. Is that the way you're working with?
Unorganized market will always work differently. Means, till even now we have no competition with them. They have a separate segment of, markets where they work. But our markets are always organized, and we have to compete with the organized players.
What is the difference, Mr. Gupta? Hi, good morning, Prashant here. That question is in the context of basically whether UltraTech, a new player, will go after your and other organized players' share, or will they kind of organize the unorganized? So what is the difference? As you say, you compete with organized players and not really unorganized, and that's a separate segment.
Yeah.
No, what's the basic difference in your industry between, as you said, you compete with the organized space and the unorganized will remain, is a separate segment. What's the basic difference here?
See, it's not the unorganized means the companies, who may be working with bill or without bill. I don't know. I mean, I'm not commenting on that. But I don't know what is the definition of unorganized. Unorganized may be very small players in the market and whom you call unorganized. I can only say that we are going to continue to compete in the organized market, and the market is growing rapidly, and not only in India but also geographically. We have a lot of footprints in India as well as outside. And I don't see any impact on our business for next 10 years and our growth also with UltraTech coming to this business.
Will you have to spend more on distribution? Will you have to just give us a size? What is the size of the industry? What is it growing at? And what's the growth rate you see for the next few years? And will you quicken the pace of how well you distribute it across the country? Is there a geographical aspect to it? Just some of those things, sir.
See, we are already present all over the country. And so far as distribution is concerned, we have our distribution channels in every part of the country now. And our models will continue to take our distributors along with, so that we continue to get the market entry into new spaces. Market is growing rapidly in terms of industries, real estate, where the wires goes. So far as cables are concerned, they goes into the infrastructure, new industries, and power energy sector, and as well as exports. So, I mean, the market, I think, will be growing anywhere between 13 to 15% year after year, and no one player can garner this kind of market. It is not copper or it is not cement that one or two players can monopolize.
Okay. Since you mentioned copper, Mr. Gupta, I wanted to understand, do you think UltraTech will have some kind of benefit because their group company Hindalco is into aluminum as well as copper? Or you believe that raw material availability is not a big benefit to them? Your analysis?
Yes, it will not be a big benefit to them. Reason is, no company would like to subsidize one business to the another. So and even if one subsidized by 1%, how does it matter? Import channels are also open. So I have seen that in this context, we can continue to depend on imports. There are other players in the copper coming up, like Kutch Power of Adani, and Vedanta is already there, and imports are already easily available. I don't think that there will be any problem so far as supply chain of copper is concerned.
Mr. Gupta, just a couple of questions. Just to reiterate, you don't expect margins to come under pressure. It should stay at 10 to 10.5%, right?
Yes, absolutely.
But you have plans to expand your margins by 150 basis points by FY28. You've guided for that in the past. So what happens to this margin expansion target?
There will be no problem in margin expansions, because this comes by economies of scale. And I have said that we have no fear in our growth plan of 20% plus for next 5 years, doubling our turnover to 25,000 crore. And we are rapidly growing in the export markets. I see that in next 2 years, 20% of our sales will be coming from export markets. We are already well established. We have a lot of approvals in many developed countries. So I can assure that there is no reason to worry.
So no risk to 150 basis points margin expansion by FY28. You maintain your revenue target of 25,000 crore by FY30, which means a 20% plus kind of revenue CAGR from here, and exports should hit 20%. Is that correct, Mr.
Yes,
Gupta?
Okay. Absolutely.
And you also have a capex plan. I think you've already acquired 60 acres of land. Do you get the sense that, with UltraTech also coming on board, many companies are planning their capex, there could be a bit of an oversupply situation? Or would you rethink your capex?
No, there is no question of any rethinking of capex. In this year, we are doing a capex of close to 800 crore, or next year the capex will be 1,000 crore, which is ongoing at our new plant coming up at Sanand. And in the next financial year also, we will be doing a capex of close to 800 crore. We will not be reviewing or reducing our capex plan, and I mean, our growth trajectory will remain the same.
Okay, all right. Thanks a lot, Mr. Gupta, for joining in. You're trying to allay concerns of investors. For the time being, they're very, very nervous. But as you're saying, no change in your growth plans, no change in profitability. Industry is big enough to accommodate another big player. Thanks a lot for joining in. Well, let's hop across to Mangesh. Hi, Mangesh. Good morning. Thanks a lot for waiting by. Mangesh, why did they do this, right? I mean, UltraTech, the purest play on cement, the king of the ring, they have been maintaining their profitability. Why would they do something like this? Your first take on it.
Yeah, good morning, Nigel, and thanks for having me. Yes, the same question. So basically, what we have seen is that historically, the Aditya Birla Group has tried to, create certain pure plays who have growth bigger in the segments that they operate in. And most of the conglomerate business was in Grasim, which is basically the holding company of the group. Even the paints foray that they announced was announced through Grasim, and this is a relatively smaller investment compared to the paints business what they have invested. So we are also surprised that why they choose UltraTech as a vehicle to invest in, and whether the next stage of investment. So they basically mentioned that they want to be part of the entire construction value chain. So the jitteriness would be on whether next set of investment would also be routed through UltraTech, whether it will have an impact on capital allocation through cement. So that's the big question, and it's in that sense it is quite interesting to see whether where this corporate structure goes from here on.
So you're saying there's a risk that there could be further capital allocation in this non-cement play, and that could be a risk, right?
Yes.
Okay. The stock is down now 4%. If I put in the numbers, this is less than 10% of their annual capex, this 1,800 crores approximately. Their cash flows are superb, 10,000 crores per annum. In that scheme of things, the stock is down 4-5%. Do you think part of the bad news is in the price? And if there is no additional capex in non-cement businesses, do you think then the stock looks pretty well placed? Because after all, it's corrected from more than 12,000 rupees plus to these levels.
Yeah, see, the current correction is not because of any cut in numbers, because anyways, the foray that UltraTech has announced, that will probably get completed by end of FY27. And as my former speaker said, that probably it's going to take 3 years. So basically 2 to 3 years, I don't see financials getting impacted much. But as I said, it's largely based on sentiment. So we need some more clarity in terms of where the next set of investment is going to come from, and whether now UltraTech is, because probably the operating cash flow of the business is relatively better, whether this will be used as a vehicle to finance most of the new ventures of the group. So that's where the uncertainty lies. So if there is more to come from here on, definitely I don't see this as a buying opportunity. But if I have to look at it purely as a cement play, definitely I would buy it.
Okay, and in your cement picks, where does UltraTech come in there? What is the top buy?
Yeah, those are large cap names that we like. We like both UltraTech as well as Ambuja. And the third one we would like to pick currently based on the regional dynamics is Shree Cement, which we feel is interesting.
Okay. All right. Thanks a lot, Mangesh, for joining in. That's the only question I've heard from all sell-side analysts. Why? Just why would you do something like this through UltraTech Cement? For the time being, the stock is down close to around 4%. We'll have to wait to see whether or not they have bigger plans with regard to putting money in non-cement businesses. For the time being, UltraTech is down, but the bigger pain is in the cables and wires businesses.